Price, of course, measured in dollar terms, which, as I said, is totally meaningless, is going to continue to accelerate. And again, don't look at it that way. Look at it what you are about to lose in your paper wealth if you continue to hold the paper assets that you've made so much money. Now, when you have a chance, and gold is still only $4,500, very, very cheap, and silver at $75 is also massively cheap.
Hey friends, welcome back. Thanks so much for clicking play. Fantastic to have you back on this day where they slammed the heck out of silver like it's some broken, forgotten about bubble tech stock. Meanwhile, the Korean market absolutely melted down today, down some 10%. Certainly, the forced selling must have played some role in the precious metals sell-off. The soundbite you just heard is from Ivan von Greuers. And if you think $75 silver was cheap, well, try $62 silver. In this conversation with my new guest, Micah Haince, we're going to be talking about gold's bottom. We have a chart for you that is a must-see. Where we think gold could go in the short term, $20,000 is in play, with a gold revaluation possible on Independence Day. We'll talk about that and much more in this one. Thanks so much for tuning in. Before we start, just a quick word. So guys, I've been telling you about my 72-hour fast, and my friends were telling me you got to drink 3 bottles of water every day, not 16-ounce bottles, the 32-ouncers. So I turned to Native Hydrate, which stands out of the crowd. It's a 39-in-1 electrolyte and amino acid formula. Now, most people know they need to drink a lot of water and a lot more than they do. But after age 50, your body's water reserves drop, and without the right electrolytes and amino acids to hold fluid in your cells, you'll feel fatigued, foggy, and cramped no matter how much you drink, especially if you try a fast. U.S. Army researchers discovered that for older Americans, the optimal hydration formula isn't high-sodium sports drinks. It's amino acids combined with low-sodium electrolytes. And that's exactly what Native Hydrate delivers. 3,000 milligrams of amino acids, key electrolytes, and only 200 milligrams of sodium per serving. Just the right levels for everyday use. It's available in mixed berry, peach, mango, and tangerine, only has 5 calories per serving, and there's no artificial dyes. This is the hydration you need. For my special offer plus free shipping, head to nativehydrate.com/SGT. That's nativehydrate.com/SGT. You can try it risk-free with a 365-day money-back guarantee. The link is below this video. Hey friends, welcome back. Thanks so much for tuning in for this June 23rd broadcast. A very important update today about the precious metals markets and U.S. debt in general. I have very good news for those following the silver price. But by the way, $39.3 trillion in debt and counting. And in this conversation today, I'm happy to bring to the show a new guest, Micah Haince. He's a manager over at Noble Gold, and you guys know Noble Gold is a terrific sponsor, and anybody that wants to take a hedge against financial collapse and the demise of the dollar would be wise, in my opinion, to get physical silver and gold. Micah, welcome. How are you, sir?
Thank you. I'm very well, and it's a great pleasure to be on your show. Over the years, I've had quite a few clients come to us through SGT reports, so thanks so much, and it's going to be fun.
Hey, I appreciate you. Just real quick, real quick, let me just show you the good news, guys, and then I'll ask Mike a question about some of his influences in the space. But great news. When priced in silver, the fiat US dollar is no longer inflating away, guys, so all is well. As we're having this conversation today, June 23rd, it's actually worse than the tape I painted here. We're at $62.09, down $3.68, down 5.5% like a tech stock, like it's the internet bubble melting in the year 2000, Micah. Make it make sense, my friend.
Yeah, so this is the level that we've been at before many times in the last 5-6 months. And those last few months we've spent consolidating within a range, a consolidative zone for people to think about it a little more simplistically. Think of it as prices going sideways within a rectangle that's kind of on its side. On the high end, we've been as high as 93 times over the last 6 months. On the low end, this is the fourth time that we've been into the, let's call it low to mid 60s at 62. And so if you want to zoom out, what you've got is really a consolidative range, the sideways move. I know it's been a little bit of a roller coaster, but these are necessary kind of technical, corrections and consolidations. Silver has a tendency to make a floor, spend some time building that base, and then it launches multiples higher, corrects part of that move, and goes sideways at newer, higher levels. And that's all we're seeing, right? So I know it's been a little bit of a frustrating time for people who bought on the higher side. Obviously, you buy these physical precious metals as a long-term hedge, as a multi-year buy and hold. But we will break out of this consolidative and congestive price range, and we'll see higher highs, obviously, coming up. But yeah, it's on sale. We're extremely busy with people who are buying the dip. Actually, most of our transactions and sales right now are repeat clients who own the metals much lower. For example, a lot of my clients own silver at $20 and $30. They're the majority of buyers here. So that should tell you something, right? It's a great time to add. Again, we're at the lower part of that consolidative range. If you're thinking about it, absolutely, this makes a lot more sense and is 50% off from where it was 6 months ago, right at 120. So that's my thought. Those are my thoughts on that.
Those are my thoughts too. And actually, I don't even let this kind of stuff put me in a bad mood anymore because I know that what I own in physical form, in terms of silver, gold, and platinum, I also own a little bit of palladium. That's real money. That's tangible wealth. And as we watch this internet AI bubble, I think, melt down, the SpaceX IPO, I think, is just absurd. It was $3 trillion at its peak in valuation, Micah. Make that make sense. But I want to play a clip for you regarding gold and U.S. gold specifically in just 1 second. But let's set the stage for what may be coming in terms of the economy, the potentiality for a collapse because of what Trump let out of the bag just the other day when he thought he had a peace deal with Iran, at least before Israel sabotaged it. Listen to this.
Also, we run out of reserves in about 4 weeks. There are reserves all over the world, and we would really run out. And there'll be a time when you wouldn't be able to get it. And you want to see bedlam?
Do you want to see bedlam? You know what? I've got comments on that, Micah, but the floor is yours.
Yeah, look, I would say obviously they've been running the SPR, this Special Petroleum Reserve, down for the last few months. I'm not sure if he's over exaggerating with how much oil is actually there, but it's very concerning to think that we could actually have only, at this point, 3 weeks left of oil before reserves run out. I'm no geopolitical expert, but I've heard that even if we had an agreement as of today and, it's officially settled and the strait is back open, it takes probably 6 months to a year to get back to only about 80% of the capacity that we had flowing through there prior to the shutting down of the Strait of Hormuz. So I think that it's bad. Obviously, oil prices have been very volatile as well. But one of the things that concerns me is one of the best predictors of recession is when the oil price spikes by 50% or higher within a year or less. That is a 6 out of 6 perfect score predictor of a coming recession. And obviously, higher oil prices causes inflation. Then you have less consumer spending, less consumer confidence. And so, we have had that move. We did hit that threshold. And I don't want to doom and gloom anyone, but I have expectations for a very bad recession and a very bad stock market crash, but probably later in the year or early next year. I think that Trump will do everything and anything that he can to keep the ship running smoothly until midterms. Obviously, big political impetus to keep things running, and so we'll see what happens. But yeah, I'm pretty concerned about the economic impacts of this.
And regardless of how this plays out, the debt service on the national debt is still a tidy sum. It's approaching 1.5 trillion a year, I think, at this point. So regardless of what happens with the economy, those debt payments are still due. That's why on days like this, when they slam silver in particular so hard, so much harder than gold, but they slam gold too, I'm truly amused by it because I know what's coming. I can see the writing on the wall. We started with it with that U.S. national debt clock, $39.3 trillion and ticking, and that doesn't count unfunded liabilities. Now, meanwhile, folks, they took us off the gold standard and put us on the petrodollar standard in 1970. And to that end, we're wondering, how much gold does the U.S. really have? Are there truly 261 million ounces of physical gold in Fort Knox? Well, Cheryl Atkinson had the same question, and recently she asked Trump about it.
What happened to the audit of Fort Knox?
Which one are you talking about?
There was, I think when you first got into office, you and Elon Musk talked about auditing
Well, we
gold to
wanted
make
to go
sure it's
knock
there.
on the door, Fort Knox, very thick door, and to see whether or not we have any gold in there. Because we'll take a look at it. It's a very interesting question. Yeah, we played with that. I wonder if they left the gold in Fort Knox because they steal a lot.
No need to really do that, though?
Well, I don't know. I think it's. I do want to go to Fort Knox sometime. I want to see if the gold is there, which I'm sure it will be.
Okay, there's a lot to unpack there, folks.
I wonder if they left the gold in Fort Knox because they steal a lot.
A lot to unpack there, because I'm starting to get the sixth sense as people talk about the potentiality for a gold revaluation on the horizon as early potentially as July 4th. You know what? If that doesn't happen and Andy Schectman gives it 50-50 odds, Micah, if that doesn't happen, it's because Trump knows the gold is not in Fort Knox. I mean, that's one take. Your
Yeah,
thought?
I've got my take on this is, and I've actually done quite a bit of research on this. Colin, my CEO, and I did several shows on this last year in February, so February 2025, when they first started talking, him and Elon back when they were tight, when they first started talking about auditing Fort Knox. And let's just maybe cover the timeline. They started talking about it back in February of last year, and then all of a sudden it went dead silent. And I think he was told, hey, don't talk about this. We probably don't have the gold. And my research, what it showed is the majority of the holdings that we know that are there from the last full audit that was done in 1974 shows that a lot of the gold bars that are there are what are called coin bars. They only have a purity ranging from 88 to 92%. And that's not meeting international standards for what's called good delivery. You need 95% pure gold or higher to have good delivery LBMA standard bars. So whether they have the 8,100 tons or they don't, or maybe they do, but it's not actually up to the purity standards, I think those were the reasons why they talked about it and then it went dead silent. What happened shortly after that, though, is the gold price started shooting higher. We had a gold price of 26 or $700 at the time, and we got to a high of 5,600, right? It pretty much nearly doubled. It was up about 85% in less than 12 months. And I do think that there was a ton of institutional buying, potentially even on behalf of the Treasury and or the Fed or some larger banking institutions here. And they may have realized, okay, it's not there. Stop talking about it. Let's get it back to being chock full. We need at least those 8,100 tons or maybe higher or more. In recent weeks, they started talking about it again, and this is leading up to the gold revaluation. So, the reasons why gold revaluation makes sense are because with 8,100 tons in the treasury or holding that much on the balance sheet, at the price of $4,000, that 8,100 tons generates $1 trillion of net new cash in the gold revaluation account at the Treasury. This account exists. It's been around for decades. There's nothing in it because we haven't actually revalued gold from the price that we currently hold it on the balance sheets at $42 an ounce. So the idea of marking gold to market, which means just allowing it to be held on the balance sheet at the current level of 4,100, let's call it 4,000, that provides $1 trillion in net new cash without having to raise taxes or cut spending for the government. Now, that hardly makes a dent in the national debt, right? We have 39 trillion. $1 trillion doesn't do anything. But the idea is that if they were to revalue gold at a much higher price, call it 20,000, 50,000, they could actually wipe out the national debt overnight if they put $150,000 price on an ounce of gold. Do I think that's likely? I would actually take worse odds than Andy Schectman. I would probably put only a 10% chance at an actual proactive revaluation. And the reason is that I don't think this is not necessarily against Trump, but it's all governments want to print their way out of trouble when they run into it, whether it was COVID or 2008. Any kind of economic crisis is met with money printing and lowering rates and essentially just bailing out the boat with by expanding the money supply. Obviously, that's good for gold and silver, but it's bad for all of us who experience the devaluation of the currency. And they will have, I think, the largest financial crisis in 100 years at some point. Like I said, it might not happen until next year or after midterms. Nobody knows that. That's $1 trillion question. But we have the most expensive real estate of all time, the most expensive stock market of all time, the highest national debt, the worst bond market we've seen in decades. All those things combined, when the bubble pops, they're going to have to bail out that boat. We're going to have a recession that's either initiated by a stock market crash or a stock market crash that's preceding a recession. We're getting one or the other. I don't know what sequence it'll come in, but when they do, what do you think they're going to do? They're going to respond to that financial crisis the same way that they always do. They only have those two tools, so they're not going to repeg the dollar to a gold standard and have a fixed money supply, because they're going to need to print like crazy to try to keep things chugging along. And so I think that we do return to a gold standard, but it won't happen until after the next crisis. And think of it like during COVID, right? We had COVID in 2020, all printing for 2 years. And 2 years later, we had 9% inflation from the $9 trillion that they printed and injected into the economy in order to save it during lockdowns. What I see happening is in, let's call it 2027, another big financial crisis occurs. They'll respond the same way they always do. I wouldn't be shocked if they print something like $20 trillion in order to save the economy this time. And then think about 2 years later, we'll probably have 20 plus percent inflation. Maybe we get into hyperinflationary territory at that point. And so I think that the administration and all governments globally know that this global crisis is coming. It's just a matter of when. They'll respond that same way, and they won't, in my opinion, repeg to a gold standard prior to that. They'll have to do it afterward, because they'll kill the currency in that process, in that next big print. And I think that they'll have to reinstill confidence in the currency by repegging it to gold at that point, not before.
All right. Well, you got one number absolutely correct, because I did some back of the envelope math before you came on. 261 million ounces of gold divided into a $39 trillion national debt. And we'll forget about that 39.3, that pesky extra 300 billion in ticking.
Right.
Ignore that, and we come out to $153,250 per ounce for gold to back all of the debt and the money that's been printed. But we know that's not going to happen. It could happen, but it's probably not going to happen. And we're going to play a clip from Andy Schectman about what he thinks could happen. But first, let's play a clip from Judy Shelton, who I think was Trump's top pick for Fed chair, and she's a big gold bull. And she brought this up. She was discussing the possibility of a gold revaluation. Does it make sense? A gold-backed T-bond? Listen to this.
I sent an email to Alan Greenspan at the time saying there seems to be a certain hysterical antagonism against the gold standard. And he emailed back. He said, if gold is such a worthless metal, why does the U.S. government and all major governments hold so much of it? Well, I think it would be clear that if the U.S. were to offer a gold-backed treasury bond, it's out of strength, not out of weakness, because the dollar is already the number one reserve asset held by central banks. Number two is gold. It has displaced the euro. So we have the number 1 and 2 top positions. We almost have a monopoly. Obvious way to address it, and by far the most impactful, is to have President Trump, whether or not he includes Elon Musk with him, both gentlemen have spoken of this, walk through Fort Knox and then have an official audit taken that the gold is not only there, but that there are no encumbrances. I was very happy when the Wall Street Journal ran my piece calling precisely for a gold-backed treasury security to be issued on July 4th, 2026. That was circulated at high levels. I can't say. Would like to think that there's a chance, but I don't know. I won't be the decider.
So we'll keep our eyes on it, guys, of course, but let me just also provide a glimmer of hope for those who are getting a little beat up today by the markets and the insanity, right? Melting down silver like it's a tech stock in 2000. Well, I've got a chart for you to share from Jordan over at the Daily Gold, and it's very, very telling. And this guy has been right about a lot. But here's Andy Schectman and his thoughts on a gold revaluation. In fact, before I play it, did you have a comment on Judy Shelton, or do you want me to play this first?
I love Judy. I'll just say quickly, I think that she rightly understands the value of gold. I think what she's trying to do is kind of her idea of having a gold-backed bond makes it kind of an appealing way of being able to fund government debt. Obviously, bonds right now are in a pretty big slump. It would be redeemable in gold at the end of the 50-year. I think it's a 50-year bond. At the end of the 50 years, you can actually redeem the gold. It wouldn't be my preferred way of holding it, but I think that they have to come up with ways of, attracting the bond market or bond investors, and by pegging it to gold, I think obviously has great benefits. But we'll see if it happens. Like, she seems quite skeptical too. She's obviously circulated the idea. It makes a lot of sense to a lot of people. I wouldn't be mad about it. I would choose still to own it outright physically, as we do here at Noble Gold. But it seems like she's not certain either if we're going to get anything like that on the 4th. And we don't have a long time to wait, right? We've got just 2 weeks before the 250th anniversary. I think it's obviously a big milestone that should be celebrated with something big like that, and we'll just have to wait and see what Trump's got in store for us.
Well, and given all the front running that we've seen in the stock market and all the malfeasance and the insider trading, I would candidly admit, guys, that gold and silver specifically are not behaving like smart money knows what's coming. They're not behaving that way at all. So I might put the chances of this actually happening down closer to 10% like Micah. And I'm not saying just to get to $153,000 an ounce gold either. I'm saying to make it 20 grand, which might be more in line with some of the options trading we're seeing for December. We'll get to that here in the conversation. But let's get Andy Schectman's thoughts here.
July 4th will be a big deal. I don't think I'll go to sleep July 3rd. He is going to make a speech. We're going to go to gold-backed treasuries. This is their one path out where you can inflate and you can also bring back manufacturing to bring back your ability to produce more than you consume. Gold goes higher, the dollar goes lower. You bring back manufacturing at zero upfront costs if you can back the back end of the treasury market with gold.
What are the odds that you're giving this now?
50-50.
The 50-50 chance that come July 4th, Trump announced a gold-backed long-term treasury.
If you put the pieces together with the Genius Act, the finalizing of the Clarity Act, I'll fall on the sword if I'm wrong. But if I were running this country, that's exactly the way that I would go. Because if not, our future is becoming bleaker by the day.
Could we still have the dollar as a medium of exchange, as a unit of account?
Yes.
But have gold as that mutual reserve asset?
Yes, because the reserve is in gold. If you hold the dollar and think it's going to preserve your purchasing power, you might as well hold a melting ice cube in your hand.
All right. Well, we all know that the fiat dollar is a melting ice cube. And what do you make of it, brother? How does that even look? What does that look like to the rest of the world? I guess the idea is that the rest of the world then gets interested again in investing in America's future because they've got a 30-year bond tied to gold. Do they get to take delivery at some point? How would that even work?
I think in Judy Shelton's proposal, it would be redeemable in the actual gold, and then you get paid obviously a yield to hold it every year. So let's say it's got a 3, 4, 5% yield. Whatever you invest, you'd get that in a coupon every year. And at the end of the 30 years or 50 years, whatever it is, you end up being able to redeem the gold itself. Now, again, I'd rather hold it outright. I don't want the government really holding on to my metal. And again, I think we need to really clarify what's there. How much do we have? Are there any encumbrances? Different analysts have different opinions here. We on paper have the most gold of any country in the world, 8,100 tons, 261 million ounces. But, I would say I'd take pretty good odds, better than 50-50, that China probably has more than what they purport to have, which is 2,500 tons. We know that they haven't exported any gold for over 20 years. They've been buying gold mines all over the world for at least that long. They are aggressively purchasing it and pulling it out of all the exchanges these last few years. And so I wouldn't be shocked if China were to unveil that they actually had probably something closer to 20,000 tons. And the risks in any kind of gold revaluation obviously would do wonders for us if we could eliminate our debt, if we could do all these things. I'm all for that. I'm all for sound money. But the problem is that on the other side of that revaluation, you also potentially benefit all of the, let's call them the Axis powers, right? The East versus West. So all of our, geopolitical opponents who have been focused on buying lots of gold. Some of them have been buying lots of silver, but any kind of gold revaluation benefits us, but potentially them as much or more if they actually do, in fact, hold more gold, which would be probably my strong inclination. I'm not sure we have all the gold we say that we do. And, I'd be pretty surprised if China wasn't actually holding back for this eventual revaluation. And at that point, or at some point, they'll say, haha, look how much we have. That puts us now in a position of power. So we'll wait and see. I think it's a lot of speculation. But like I said, we don't have a whole lot longer to wait. To be able to get there. Now, you mentioned this, the options calls for December for $20,000 gold. I think there another big portion of those for $900 silver. And I'll tie into that the recent, I think it was from last week, the recent post about the U.S. Mint having these commemorative bullion items where they're selling an ounce of gold. It's a 250th Liberty Bell coin for $20,000. And they're selling the same 1 ounce silver Liberty Bell coin for $1,500 an ounce. And so, a lot of people again speculating, has the U.S. Mint front run the Trump administration by unveiling, maybe accidentally, that we are going to have these new prices for an ounce of gold and an ounce of silver. You said this, and I agree. There's been a lot of insider trading. There's been a lot of front running from this administration, whether it was in cryptos or different tech stocks. And I'm not a political guy. I don't really care. I just try to focus on how I can protect myself and my family. I think that ultimately that's what buying gold and silver is all about. The corruption that we've seen in all institutions, healthcare, finance, government, everyone's just trying to enrich themselves while they can and while they're in the driver's seat. And it would not shock me, these calls that you'd mentioned, right? These calls for $20,000 gold by December 2026 and $900 silver. Like, why would someone bet tens of millions of dollars on such an outrageous gold price? Well, again, the insider trading trend, maybe they do have information that we don't, where they know that there is going to be some type of revaluation. So I'd say those two little dots can be connected. The U.S. Mint price that they showed on their website, these calls that are being placed for tens of millions of dollars on insanely higher gold in the very short term, maybe that actually points, to Andy's point, maybe it is closer to a 50-50 if you want to believe in that stuff. I really don't think the U.S. Does anything proactive. They'll have to do it in a more of a reactive fashion after the next crisis.
Well, we're going to find out on or before, hopefully on July 4th. Hopefully, it's not going to be like the Q stuff, much ado about nothing, because, where are the arrests? Where are the deep staters being brought to justice? Tony Fauci, I'm talking to you. But, here's the other thing I want to mention. Sometimes when we have days like this, Micah, with gold being slammed, but silver being slammed 5.5%, like it's a worthless relic, it does make me laugh. It amuses me because it feels a little bit like the Rothschilds' run on the Bank of England during the Battle of Waterloo, right? They were selling into the weakness, causing everyone to believe that Napoleon had won at Waterloo when the Rothschilds had the fastest horses and the best communication, and they knew that he'd been beaten. So they sent the signal to the market to collapse the market so they could buy up all the UK, the government debt, for pennies on the dollar. That could be what's happening here, because according to our friend Jordan over at the Daily Gold, shout out to our very first webmaster, Stefan, who's sardonic and smart, just like Jordan. I want you guys to hear this. This guy is an excellent chartist. And here's what he has to say about historical patterns, past sell-offs in gold, in the cycle we're currently going through.
Here is our gold correction analog chart. Now we plot the 1973 and 2006 corrections in gold on the same scale as the current correction. Why do we do that? Well, these corrections were the first big correction after a major breakout in gold. 3 major breakouts in gold, 3 major corrections. And what do you know? The black here is the current correction. Look at how well it's followed the other two. In the last 2 or 3 months, they've come down like this. In 1973, this was the bottom, about 39.50. Now, the bottom in 2006 was right about here, call it 41.50 or so. So based on this analog, this move down like this, I think could be setting up a final bottom, okay? So look for that over the coming weeks. And speaking about how the market could bottom, if you watched my video last week, I talked about it here. To look for one of these types of patterns with respect to how gold could bottom over the coming weeks. Now, I think we can rule this one out where you have a hard move down, you have a rally, and then it goes sideways before the rebound gains traction. I think we can rule that out now. I don't think we're going to see that type of move like that. So to me, it looks like it's going to be one of these two, this or this. Now, because the fundamentals are bearish right now, and one point I want to make, a good percentage of that has been discounted already. This move down in gold has actually already discounted one rate hike, in my opinion, but I digress. So moving back to how gold could bottom, these are the options where you get a double bottom like this, where it comes down like that, or you see something like this where it's a false new low, okay? It comes down like that, and then you get a move like that. It's a false new low. So I think we have to be on guard for something like this, a false new low. And so support for that, you do have great support here at the recent low at 40.50. That's also the 38% retracement or around there for the 22 and 23 lows. It could also come down here, I think to 3,900, 38.50, something like that. So that's a level to keep in mind for a final low in gold.
All right, let me pause it right there, guys. I played that a little bit longer, but I really like Jordan. He's very, very bright, and he's been saying, in his opinion, now this goes back several months, he's been saying he sees the low for gold happening in late June or early to mid-July. I don't know, brother. 4th of July right around the corner. What say you, Micah?
Yeah, so I love Jordan's analysis. I'm a big technical guy myself, and I agree with what he's saying. So, we've held on to key levels, 4,000 or so, just to make it a round number, and gold has held. Like I said, at the beginning of this, for silver, 62 has held for the last 6 months. We haven't been able to get below there. Do we have to go to 55, the previous breakout? It was resistance prior to October when we broke through that. We went straight to 120. We might have to do that, but $10 of potential downside is not worth worrying about when we've got hundreds of dollars of potential upside. 4,000 in gold is held. He's right. We could have a false breakdown below there. Maybe have to test something like 3,800. But I like to look at seasonality on top of technicals, and I'll tell you, having been an investor for over 10 years and also working here at Noble Gold for 6. The summer months, and June in particular, is actually one of the best months to buy. It's actually the month that you most typically get a yearly a low in both metals. And so some of the best purchases you can make are in the summer months. There's not a lot of action that happens in June or July, and I agree with him. It'll align very well with the 4th of July and whatever news or announcements we get out of that. But just on a technical and seasonal basis, he's right. I think we are going to see the lows. Maybe we've seen them already, but I think we're going to see them over the next 2 weeks. And then we should have a pretty significant rally again through the fall. Usually spring and fall are when you get the big rallies in the metals. Obviously, this fall will also have midterms going on with all the other geopolitical conflicts and issues and tensions. So I think, this is probably the best time to think about taking a position if it's been on your mind. Again, you're buying in at the low end of the last 6 months, and it's been a really solid floor. And usually when you put in big floors, that's going to turn into a launch pad at some point. So I totally agree with his analysis.
Yeah, and I'm absolutely not panicking, guys. I've been at this since 2006. My first 100 ounces of silver, I remember it like it was yesterday. All right, guys, just one more clip to play, and then I'll ask the question to Micah about his influences in the space. Mine over the years have been people like Robert Kiyosaki, more to the point, Mike Maloney, an attaché, I think, of Kiyosaki, Peter Schiff, Bix Weir, Michael Oliver, Alistair McLeod, and then, of course, this guy, Egon van Gruyers. Listen to this, guys. Cheap precious metals, are they on sale? Here's one man's opinion.
You are going to lose 90 to 95% of all your wealth if you stick to paper assets or the bubble assets. And that could take 5 years, it could take 10 years, but it's going to start soon. As you can see in the graph I showed about the gold price having gone up 130 times since 1971 and having accelerated strongly in the 2000s. Remember, we bought gold for ourselves and for our investors in 2002 at $300. Gold is now $4,500. And And the price, of course, measured in dollar terms, which, as I said, is totally meaningless, is going to continue to accelerate. And again, don't look at it that way. Look at it what you are about to lose in your paper wealth if you continue to hold the paper assets that you made so much money. Now, when you have a chance, and gold is still only $4,500, very, very cheap, and silver at $75 is also massively cheap.
I agree, and I know where people can get it and be treated very fairly and professionally. Noble Gold. Your thoughts, though? Who are some of your influencers or influences over the years?
Yeah, so I really like Egon von Greyer's as kind of a uh, Austrian economist, like looks at it very simply, obviously, money supply, and that's a lot of the calculations on the debt clock about the potential price of gold and silver is by taking the total money supply and dividing it by total amount of physical ounces. But big influences for me, a couple of them. Like I have some that are more fundamental macro view guys. Some of them are more technical. So I'd say Michael Oliver, who you mentioned, I think that his extremely bullish call for $300 to $500 silver this year is, probably not going to happen at this point. But I do commend him for sticking to his momentum. He doesn't look at price so much. He looks at momentum. So it's called momentum structural analysis. It's almost like a patented analysis form that he does. I commend him for making those calls, right? At one point, it seemed like maybe he had a better chance of hitting it. And we will get into those numbers, but just maybe a little bit further down the road than he's suggesting. David Hunter, who's a contrarian investor, he's another big influence of mine. He's calling for $200 silver this year and then a big major global bust, kind of similar to my views, after which we get money printing like we've never seen before. And then he's calling for 20 plus thousand gold, $1,000+ silver in the early 2030s coming out of the bust. On a technical basis, David Brady, global pro trader, I really like his work. And, I think, again, as someone who's an investor who's been watching this stuff daily for over 10 years because I am all in on it, I believe in it. I think it's the best place to be for the next several years with the amount of risks that are piling up here. I think that it's important to look at all these other views, but to then sort of turn it into basically a little bit of a mishmash, and then you have to formulate your own opinions. And so I tend to be pretty conservative. I do think we will see higher highs this year for gold and silver. I think we'll see those in the fall. Like Jordan saying, the congestion zone that we're in and the lows that have been put in, we need to just find the final bottom before we turn back up. But I want to emphasize, like, as a bullion dealer, right, this is a buy and hold protective play. And, think of gold and silver as like life insurance, but for your retirement accounts or for your family's wealth in general. And on a long enough time horizon, you'll make extraordinary amounts of money, especially in the type of shift that we're coming into, where currencies will collapse. We may have a sovereign debt crisis globally, a debt jubilee. Coming outside of the coming crisis, the only things that'll matter are tangible assets, in particular the monetary metals, gold and silver. And so, don't worry about the month to month, day to day, week to week movements. You're buying this to protect yourself for the long term. And with physical assets, you're outside of the dollar, you're outside of the bank, you're outside of the markets, you have no counterparty risk. And, I'm not just an investor in gold and silver. I'm a bit of a prepper. I'm a hunter. I'm a father. I'm taking care of my family the best way that I can. Gold and silver are part of that, but food and water, guns and ammo, faith and community, self-sustainability. We live on a very small hobby farm, but we've got chickens and sheep and goats and veggie gardens. And, we still have to go to the grocery store. But the idea is, if any of this bad stuff happens, which we hope never does, you need gold and silver, but you need all these other things as well. So, like insurance for your car, you buy it hoping you never need it. But if you need it, you're extremely happy that you have it. I think what we're seeing now is like a once in a 80 to 100 year move where you actually have a currency reset, currency cycle, debt jubilee, sovereign debt crisis on top of a global economic recession, depression. And, that formula or confluence of cycles and things that can go wrong. I don't think, especially like older clients of mine, you just want to have at least a good chunk in the stuff that you're never going to lose on the right kind of time frame. And so I know you agree with me. I think a lot of your audience members probably do too. But yeah, like let's just see what happens, but take the steps now to prepare yourself and protect your family for what may come down the road. And I don't think it's going to be good. It's just about when, not if it all goes down that way.
Yeah. Well, and the thing to remember too is that they'll never stop printing because they can't stop printing unless there's a calamity, an economic crisis so bad that it's like a Great Depression and they bring everything to a halt. Because who's going to be making and buying solar panels when everybody's standing in a food line? Let's hope it doesn't come to that. The other thing I want to point out, guys, and Micah, you can comment on this as we say goodbye. When people talk about a bank holiday, or, a U.S. banking crisis where, well, a banking holiday, they close the doors, right, on a Friday early. And then there's an announcement made, Monday or Tuesday morning that your dollar has been revalued or devalued. We've seen it time and time again in Argentina. And I guess what I'm driving at here, Micah, is that $20,000 gold, a revaluation of the U.S. dollar or a revaluation of the gold in dollars, that would just be a banking holiday. That would be the revaluation of your dollar's purchasing power, guys, when priced in gold. That's what that would be. And would it really suck for those who don't hold gold and silver? Yes, it would. So I think that's one sort of rational way to sort of end the conversation about an Independence Day gold revaluation. It could happen, Micah, and that would be your purchasing power decreasing drastically when priced in gold and silver in physical form. And we'll leave people with that. Your thoughts?
Absolutely. Final thoughts is I think that people need to be as independent as possible, self-reliant, self-sufficient, be your own bank, hold your wealth in a format that is timeless, been around for thousands of years. Like I said, can never go to zero. You're outside of all these various risks, financial institutions, currencies, stock markets. All these things right now are basically blinking or flashing bright red. And again, it's not a matter of if, it's a matter of when we see something bad. And I don't hope for that. It's just like you said at the outset of this call, or maybe it was before we hit record. Hope for the best, but prepare for the worst. And gold and silver are a big part of the overall formula for protecting yourself, but obviously all those other things that I mentioned as well. So yeah, I just welcome people to, you can call and ask for me. I'm happy to work with anybody. We've got great colleagues here as well at Noble Gold. You can email me, Micah at nobleira.com. Call me 877-646-5347. And yeah, we're not pushy in any way. We actually view ourselves as like an educational service for the most part, right? And then once we equip our potential clients with the information that they need, we're very happy to be able to earn their business and their trust. And so, yeah, I don't need to sell it too hard. I think it's just the conversation leads to, and all roads lead to gold and silver being the best way to protect yourselves for the stuff that's coming. And don't wait until like the storm is upon you, because at that point, insurance is usually very expensive. You want to get it when it is down here, again, off the highs from earlier in the year and near these bottoms that video with Jordan pointed out. So it's a great time to buy. And I really appreciate the time that you've given me today and the questions that you've asked. And this has been really fun. Thank you so much.
Yeah, no, I appreciate you. I love having conversations about precious metals. Like I said, been at it since the inception of the channel when we were still allowed to be on YouTube, but those days have changed.
Long gone.
They don't like too much truth over on YouTube, but that's okay. I'm glad you guys found us on Rumble, BitChute, SGT Report, wherever you have. Thank you so much. Our guest has been Micah Haince. Did I say that correctly?
You did. You nailed it. Wow. Good job.
All right. Thanks, man. Good to meet you.
Yeah, you too. Thank you so much.
Absolutely. Friends, if you're still with us, thank you. I'll remind you every single day for free. Check us out to get the real news 24/7 at sgtreport.com. And until next time, may your dollars rest securely in your wallet. But they're going to last longer in physical silver and gold, folks. Until next time, God bless. Bye-bye.
These are individuals who march through the streets with hammer and sickle flags. They have family read-alouds of the Communist Manifesto. They celebrate Karl Marx's anniversary of his death as well as the anniversary of his birth, like he was a Catholic saint. They routinely support the idea of revolution. They call for revolution. Everybody forgets why Pope Francis was in Bolivia. They just remember that particular meeting. He was in Bolivia And he spent the next few days in Bolivia with Evo Morales at his side to oversee the Second World Meeting of Popular Movements, where there were a bunch of communists getting together to promote their communist ideologies and to spread them through with the church's authority.